Hi there, traders, and welcome to Trade the Structure, and welcome to another morning Jumpstart macro view where we take a look at what happened overnight and major action and key levels that we can work from. So some trade ideas on our key markets. So let's get started. We're looking at the ASX 200. So that bounced back quite well. It was quite unusual. The market was down in the US, was down quite hard. We opened out and we basically ramped straight up after that. So it was really no looking back from the open. It was all one-way action straight up. We consolidated into the close and you can see it just continued to ramp up overnight. Now, in the US, we had Powell come out, basically pour cold water on an aggressive rate rise action. So there's a serious concern that they're going to muck it all up with their rate rise and inflation is going to get out of hand. Whether that's just the market and the news pumping that story, or and Powell and his mates might be right, or whether they're actually just really reluctant to raise rates aggressively because they don't want to, really cool this market too much, because markets definitely overcooked. Shares are really well overvalued, and any sort of action from aggressive action into rate rise at least really caps any or at least the cost of debt. So the higher cost of debt means growth really it stints, or it cools a lot. Okay, and people might just be seeing that any sort of aggressive rate rise action, they're going to dump shares, and I don't think the Fed wants that and his mates. So they really they put like I said, pour cold water on any idea that they're going to be aggressive towards interest rates, and they're just going to raise it. And RBA did the same sort of thing. Everyone was expecting something from the RBA. They did zero. Okay, and they're talking it up, doing zero for quite a while. So they're not going to be, no one's going to be too aggressive from the Fed Reserves anywhere on rate rises, because they know what that does. All right, so that's pretty much what the market took that as a positive, and just up she goes straight away. So that was ASX. Today, I would expect some sort of action at 7207. It's going to be a positive open, up about 70, 80 points on the ASX, the underlying index. Maybe a bit more bargain hunting, or maybe it's a bit of a trap for retail on the open, trap them with a bit of a pop up to this level and then squeeze them straight back out again. Who knows? Because like I said yesterday, we would have thought it was a bit more bearish in the open, but it was straight up from the open. So it could be that everyone's going to expect good things on the open, and we come straight back down again. Either that, or we're just going to get rammed higher like we did yesterday. Looking at Asian markets, Hang Seng wasn't too bad. This was the open. It sort of faded all day, all session, retested this 22,305 area, and then lifted as it didn't really have much choice when the US was quite positive. Held okay into the close at 22,495. So really for me, just hovering around this level, it is still an established downtrend. There is some major support through here. Well, it has just been breached on the daily perspective, which could mean that if it's flushed and we actually rally today, it could be a good thing for longer term Nikkei traders. Hang Seng traders. But for now, intraday, it's a bit of an each way bet whether we flush up and then drift lower again, or whether we sort of flush down and then rally all day. So generally the open is going to be more important than anything else. You're going to see sort of one move, it's going to flush one way and then drift lower, or flush down and drift up. All right, Nikkei. So this is the action from overnight. It continued to hold. So I think it was up here. Might have been around here. Okay, this was the open of the day session. Down, another push down through 26,265, and then basically it was all one-way action back up again. So that's once the European markets got underway. It looks like they were just trying to push the market down into the European Open, and then just sort of buy it all the way back up again. So it held some nice levels, 26,430, then it held 26,555. Found some sellers at 26,682, so it'll be interesting to see whether we blast off. If we sort of pop up here and then fade, again, I'll be looking for a lower high. If we sort of pop up here and start to hold this level, look for an extension to 26,805. So it could be a positive open. Again, the Nikkei is going to be a bit like ASX is going to open positive. Right, the Dow. Now the Dow, this was just all the action to trap in some sellers. Okay, so up until here, it was looking weak. Okay, and then it basically turned on a dime and went straight back up again. And we found buyers to support it through 33,490, and that ramped straight up into the US close, basically back up to that 34,055 area. So whether we're going to get, the markets consolidates down, a bit of heat comes out of this move on the futures market at least. Futures sort of press down and then start to hold a higher low and then ramp back up into the open of the US market again. It needs to there's two things coming to the US Open. What they like to do is squeeze out, if it's a move like this, they like to squeeze out some of these buyers and trap some sellers in there. If you can trap enough sellers in there and start to chop around like this, trapping some sellers and then jam them straight back out again, they can engineer a rally up again. So if that's the case, you'd be looking for some sort of drifting lower today and a bit of a squeeze on those buyers through there, and maybe it's going to ramp up through 34.055 and test up to this level here, 34.375. All right, so US Tech, it's potentially just broken this downtrend. We'll have to wait and see. It could easily roll over from here. There's no reason why it can't. Like I said, if there's in Powell's out again tonight, if he starts to pour more cold water on any sort of aggressive interest rate rising, which is a market feels that should be, that's what they should do. But the Fed's got a different agenda. The market feels like I feel that the market's trying to be, I guess, fair about it. The Fed is not wanting to create some sort of havoc into the market if there's a massive sell-off. If they start raising too much, they're admitting that inflation's a problem. They don't want to admit anything. Okay, and I would expect that they're going to raise by maybe a quarter here, a quarter there, or maybe not that, but I think the market was looking at 0.5% at one stage. So that's probably been knocked on the head. But bonds themselves, yields are going back up again, okay, because oil's just rallying, and that's a big add to inflation pressures. Crude oil's hitting 110 a barrel, which you'll see later on. I think it traded through there last night. So yeah, it's getting a bit out of hand. It's doing $10 jumps, $8 jump last night. I haven't seen that since, I think, 2010, 2009, 2008, or probably even before that, when it was really jumping up and the volatility got out of hand. It went to 140 a barrel. So if that's what we got to look forward to, then yeah, definitely inflation is going to be a bigger problem than what they expect. And it's just whether or not the Fed's going to react accordingly, or whether they're going to react according to their mandate and keep brushing aside higher inflation. But at the moment, the market looks fairly happy. We've got some support through 13,940 that held, and we've sort of potentially broken this downtrend. Whether we start to break that, or break up through 13,320 and start to drift higher and extend on this move up, or whether this again provides too much resistance and we roll over. Okay, we'll have to wait and see how they react tonight. But it is decent enough support. You can see it got bought up 1, 2, 3 times. Like any spike into that level got soaked up. All right, so it looks like they're adamant and defending that level, and I would expect we might drift lower into the US Open and then ramp up again. Okay, depending on what, I guess, Powell's not going to change his tune tonight, so I would expect a bigger move up. Pretty much, yeah, a bit risk on again. It depends on what we see. Keep an eye on gold today. I think gold and oil and things like that, we'll just keep an eye on that today. So European markets, we've got Germany here. In DAX, you can see it's a downtrend, no doubt about that. Still a big downtrend. It's drifting off this level, so it's found the lows here. It's flushed them, 13,775. So for bulls, it's not too bad when you see that sort of flushed and it drifting back up. It starts to attack higher levels. Okay, it's trying to squeeze out some of these sellers. That's what the market looks like it's doing at the moment. It's not that by no means is a clean move up, as we had that move down before, but they never are. Okay. As people are building positions, it flushes down, they hold a level and bounce back up. It flushes down, they hold another level. So they're building a bigger position potentially. All right, so really it's about this 14,200 level. If we start to test up into that level tonight, that's another 250 points or so. Whether we can do that tonight is another story, but we'll wait and see how that plays out in the European session. Might be, I would expect a bit of a squeeze higher from the DAX, bit of a squeeze into that level. I think that's what it wants to test into at the moment, and we'll just see, because this is quite a strong support zone. All right, we look at UK 100. Now, quite choppy, really. I mean, it's still like the DAX, it's in a downtrend. It's just that this big flush down, it reversed that, and that kind of a reversal is, big heads up to some strong buying coming into the market, potentially off these lows. And we've got another reversal off this 73.06 area. So they're also looking at raising rates, but it seems to be, they actually have, I think, UK raised rates, maybe another rate rise in the cards, maybe not. But at the moment, it looks like we're starting to defend that, the European market's starting to defend these lows, okay? And we could be heading back up from here. If we start to hold this level, we've got an inside level here. If we start to hold this level through here, you can see through this zone through here, which is around 74.05, then I would expect it to push up into 75.45. Maybe not in one foul swoop, but there's going to be some bullish action coming. Okay, the trend is up at the moment. It's up off a key level. We're up off a major higher low. This is the low. This is a higher low zone, which would lead me to believe it's going to start attacking at least 74.96 and up to this level here, 75.45. over to the currencies. So the US dollar reversed, safe haven buying. So it got bought up the previous session. Everything was looking really bad. Now everything's looking really good. So it's a bit of a strange market at the moment. Don't get me wrong. It's a choppy market, and it is choppy between buyers and sellers. I don't think the buyers have given up just yet. It looks like they're still buying the dip. It's just a bigger dip in their opinion. But for me, I'm not longer term bearish, but I think a lot of heat needs to come out of this market. Whether what's happening in Ukraine has triggered enough heat to come out of that market or not is a different story. I think the market's well overcooked. That interest rate rising cycle, there's no doubt that's going to happen. It's whether the Fed are going to ease it into it or whether they're going to be well behind the curve in the interest rate rise. Inflation is going to continue to be quite strong. Okay, and they can't cool it quite as well. Maybe that's a plan for them. Just not to spook the market. They don't want to spook the market off its highs, which is pretty much what everyone's concerned about. So we've got Aussie dollar, US dollar sold off, which means support for the Aussie. And you can see this was this ramp up here was from back 230. That was basically once the Fed said, yeah, we're not going to do too much about inflation just yet. You're all kidding yourself. And the Aussie rallied. So it found some support from a weak US dollar. Found some support off 72.47. It's pumped up through 72.82. Whether or not they start to drift lower, but I would expect with the way the Fed's going with catching people offside, a bit like the RBA did, catching everyone off guard with saying they were talking about 2024 interest rate rise, and now they're talking a lot closer. Caught a lot of traders off guard, but just that change in tune. So whether the Fed is, I wouldn't expect them to change their tune, and maybe it's a bit of a grind up from here. We maybe back test into this area, maybe into 72, 79, 75 zone down to these lows, test into that low and start to ramp up again. We'll wait and see. It's all about that US dollar movement. Euro. So you can see as soon as the Fed came out and started talking, Powell started talking, bam, up we go as the US dollar headed south. So we've got some support resistance here to play with at 111.27. Now, I'm not expecting this to drift right back down and go through these lows. I'm more expecting some bigger back and fill, potentially up into, maybe that area. It just depends what the US dollar does. Okay, so the market does react, and then it reacts in the short term, and then it picks a longer term direction again, which for me, it should be up in the US dollar because we are talking about interest rate rises, some more strength into the US dollar. And as long as inflation keeps kicking higher with regards to oil, things like that, I can't see why the US dollar is just going to get sold off hard, which means that sooner or later we're going to find a bit of a peak in the euro. So whether it's just now we get a bit of back and fill just to flush out some of these buys and then ramp up a bit more through that level, maybe test into this zone in here. We'll wait and see. Right, pound, pretty much got some love from that US dollar weakness. Pressing into these lows again, you can see it's traded this low in here, reacted up off here, but faded off this zone at 134.40. Deeper reaction lower. You got these lows in here, which it's all part of this big zone through here. Okay, and it's wrapped up off there. So I would expect potentially we're going to extend to 34.40. Just give that another test. Okay, because off this is a major low, so that's a capitulation. It started to try to go, it's tested into those lows. So for me, you sort of go bid zone to offer zone. This is your bid zone. This is your offer zone. It's a clear offer zone where, sellers have been defending that level at 34.40. So I would expect we're going to get a bit of a grind higher into that level. As long as the US dollar keeps grinding lower, then I would expect us to test into that zone. Now, whether the European market before the open wants to flush some of these longs out is yet to be seen. Just keep an eye on that. I would love to flush them down, although if they're going to spike up, it may spike up into that level prior and then start to squeeze out some longs. US yen. The US yen has obviously crept higher. That's a safe haven bid coming out of the pair. So the yen being bought up as a safe haven, selling back into the yen means that if the US dollar does nothing, it goes up. So the US dollar actually crept down. There's more selling into the yen, which means they're driving this pair higher. Okay, so that's what we're looking at. I think there's a good resistance zone we could play with potentially at 115.664. Whether or not that's going to, is a different story. Whether or not that's going to hold, it may flush through, but if it starts to flush through and fade back below, then I'll be looking for a lower high off there. If it starts to flush up and then start to hold back into that level, a retest, then you're looking for an extension on that move up, potentially to that 116.30 area. All right, so that's the currencies. We look at gold. Gold safe haven bid, like I said, come out of gold. as equity markets rallied. Now, it doesn't look like they're convinced. It looks like potentially there's that level 1910 wants to hold. All right, we'll have to wait and see. I want to see more of a pullback than a little pop down like that. I want to see some sort of flush on that level, hold a key higher low, and then see if we can get a rally. I think that's going to take some time. We're on a 30-minute chart for this one. The others were 15, so it could take some time. It may react a bit lower off this level, 1928 today, but I would expect if it's going to do that, flush down and hold a higher low, we're going to see another move up, and that could be. I would expect it's only going to be if the share market rolls over again. Okay, if there's going to be more selling into the share market, because that will be a fear-based rally into gold as a safe haven, which would mean share markets will roll. Now, if this doesn't go up, don't expect share markets to roll over. We expect them to keep finding some support. Crude. Now, crude has gone absolutely bananas. It keeps getting ramped up, and anyone who's trading crude, any of the bigger players, are going to love that. They might have built a position through here. They're going to keep ramping as hard as they can and push it as far as they can. Nothing's really changed with the Ukrainian situation. If anything, it's probably, they're pushing Putin into a corner with all these sanctions from basically everyone. Everyone's sanctioning them. There's even some, I think, soccer club owner, big owner, who's selling it and sending the proceeds to Ukraine. So that's pretty good. So there's going to be a lot of sanctions on anyone related to Russia, and that like I said, it's going to push Putin into a corner. I would expect. So it'd be interesting to see what he does. Hopefully nothing stupid, like he's been threatening, and he's threatening a nuclear reaction. But I think that's just pure dumbness, and that's going to bring in. He's going to completely ruin the country if he does that, because I think that would bring in a lot of, probably bring the US into the war, and they can hammer Russia. So I don't expect him to do that, but it'll be interesting to see what he does do. And for there, I think until that situation calms down, I think oil is going to keep trying to go higher, keep pushing higher, keep ramping higher. Like I said yesterday, massive area at 110, massive resistance zone. So it's only fair that it starts to push through and test into new highs. So that trend is up. We flushed down, took out this level. So you can see how choppy it is. Took out the highs, took out the lows. We're straight back to the highs again. So yeah, just be wary of that. Okay, you don't want to be getting short off anything but a lower high. Okay, if we start to come down from here and you want a key lower high, that's what you'd want to do to get short. Otherwise, you could get caught. You get short in here, you get off that break, straight back out again, and you can get chopped around in these kind of markets. When it's so volatile, expect a lot of chop. Expect the market to push through lows and then ramp straight back up to the highs again. All right, copper. Copper's got some love as well. This was where the market roughly was. 15-minute chart, so it was somewhere around here. You opened yesterday, a bit of a pullback, and the start of the European session was all one-way action straight up until the start of the US session. We saw some profit taking. So again, it's got a bit of volatility into it. Whether we see something like this, we fade below this level at 103. Whether we fade below that and we might flush through these highs, we might just extend into that zone. For me, I'm not buying here, I'm not selling. Okay, it's pretty simple. I think if I want to buy, I want a bit more of a contraction. I want to see sellers start to come in and get it wrong. I want to see that if I'm trying to buy. I want to see a smaller risk profile than what we got here. If I'm buying here, you've got to really buy the break with your risk below. I'm not keen on doing that. So for me, I think it needs to, if we see this action, I think it could really, if we compress, everything lower highs come in and higher lows hold, and we compress price action, it could really start to expand. It could go straight through this level. All right, so just keep an eye on copper. Now your cryptos, they pretty much did nothing. They went sideways. I would have thought with this rally into the markets, into stock markets and stuff, into the major indices, I would have thought we see some sort of sell-off into Bitcoin and Ethereum especially. I don't really watch the others. It's sort of the two prime ones I'm watching for the overall Bitcoin market, the overall crypto market. But I think if we start to get some sort of lower high coming into play, there could be a squeeze. There's quite a few, stacked up from, even if it's just 38,850, and we get some sort of squeeze back into 49,000. It's $4,000 that you can trade potentially on the short side. But we'll wait and see. And Ethereum's much the same. It went sideways, didn't do too much. So we're looking at a lower high off that level, 30.36. It's still holding up, and that's the problem. You've still got some sort of support through here. Probably the same on Bitcoin, I'd say, some support through here. which is desperate to hold. The bulls would be desperate to hold that, so if you're going to launch higher again, and then all fun and games for crypto traders again. All right, that's it for me, guys. I hope you enjoyed that. Thanks for joining me. It'd be great if you can leave us a like at the YouTube channel. Give us a thumbs up if you enjoy what you hear. And yeah, feel free to leave any comments. And if you've got any questions, feel free to email me to tradethestructure@gmail.com. All right, guys, enjoy your day. Stay safe. We'll speak to you again tomorrow.